My name is Corey Hesser, and I am one of the program developers here at Kirkwood Corporate Training. I want to thank everybody for joining us today. We are here today with Tyler McCarville, and he will be speaking to you regarding the Iowa New Jobs Training Program, which is also known as the 260E, which is one of the most beneficial tax credit incentives that the state of Iowa offers. So before I hand it over, I just wanted to share a bit about Tyler. He has been with Kirkwood for 9 years and is currently the manager of the job training programs here at Kirkwood. He spends most of his time managing the 260 program. However, he also oversees the Workforce Training and Economic Development Fund, along with the Accelerated Career Education Program. So without further ado, we will go ahead and get started on why you all are here today. So Tyler, I'm going to go ahead and hand it right over to you.
Thanks, Corey.
You're welcome.
And good afternoon, everyone. I'm glad to see that so many people have taken the time to join the webinar and learn more about the Iowa New Jobs Training Program, also known as 260E. As Corey mentioned, I have been doing this for about 9 years, and it's a really great program to work with. However, I often hear from folks that I'm talking with about the program that, they've never heard of the program before, or they think that it's too good to be true, or that they might not qualify. So it's always great to come out and talk with groups like this to just get the awareness out there about how the program works, how it would benefit the companies in Kirkwood's region, and that sort of thing. So I hope by the end of this webinar, you've learned a little bit more about how the 260 program works. I hope you have all your questions answered. So, and to that point, I do want to make this an interactive session. So if you do think of any questions during the chat, please don't hesitate to use the chat feature. Corey's going to be monitoring the chat. So if you do think of any questions throughout the presentation, don't hesitate to shout those out, and we can pause for a second and answer those as they come. Oftentimes when I do these presentations, someone will be brave enough to ask a question, and then I'll see around the room people are shaking their heads and saying, yeah, I was wondering about that too. So please don't hesitate to ask any questions that you might have. Also, if you did sign up for this webinar, you will receive a recording of this. So if there's someone else that you think would benefit from it, whether it's within your current organization or outside the organization, please feel free to share the webinar link with them. Have them contact me if they have any questions. Again, my goal is just raise awareness of the program and to get as many companies to participate as possible, because it's a really great benefit to our region. So with that, I think a lot of people know of Kirkwood, but in case you're not aware of Kirkwood, I just want to kind of give a brief overview of the college. So it was founded back in 1969. We recently celebrated our 50-year anniversary. Back when it was originally founded, we were originally known as Area 10 Community College, but it was renamed to Kirkwood Community College after Iowa's abolitionist and Civil War governor, Samuel J. Kirkwood. So that's a little bit about why Kirkwood is called Kirkwood. We do have a 7-county region. So we have Lynn County, Johnson County, Washington, Iowa, Cedar, Benton, and Jones. Our enrollment across the college is around 14,000. And then we have about 130 different programs and majors across the college. So getting into the subject matter at hand, the Iowa New Jobs Training Program is the official name of the program, but it's a really long name, and most people don't call it by that. Most people call it by the Iowa code, which is 260E. So what the 260E program is it provides companies who are expanding their workforce with training funds to help upskill and develop those new employees. So the idea is, as you're bringing more employees on, obviously there's a cost associated with that. So instead of the company fronting the cost and paying for the cost of that training for your new folks, you're able to utilize this tax credit to offset that cost. How the program works. Again, the 15 community colleges across Iowa administer the program on behalf of the state. So it's a state of Iowa program, but unlike a lot of the programs that the state has, where if you want to apply for high quality jobs, for example, you go directly through the Iowa Economic Development Authority. Now, this program it's through the Iowa Economic Development Authority, but it's managed on the local level by your local community college. For example, if you were in Des Moines and your company wanted to utilize the program, you would apply through DMAC. Since you're probably in Kirkwood's region, and that's why you're on this call, you would apply for it through Kirkwood. So that kind of gives you an idea of why the college is involved. And again, what it does is it provides companies with a tax credit, and then that tax credit is an earmarked for training reimbursement. So the company can take an Iowa withholding tax credit up to 3% of the withholding that they would normally send to the state, and they earmark that for 10 years, and that gets put into a training fund, and the company can then utilize that training fund for upskilling, developing, training those new folks at 100% of the cost to the company. So as they have any of those training expenses, instead of paying for those out of their own pocket, they would submit the invoice to the college, and then we would reimburse you out of your training fund. One part that gets a little bit confusing, I'm not going to go too much into it for the purpose of this webinar since we only have a half an hour, but the training funds that each of the companies gets, it's financed by the sale of a bond each year. The reason why we do that, as I mentioned before, the company is allowed to take the tax credit over 10 years. So what we do on the front end is we look at the number of new employees that the company has created, the salaries associated with those positions, and then we do a calculation over 10 years to say, okay, based off of those numbers, here's how much of a total tax credit your company is going to generate. And then that's what your company is going to get as part of the bond sale. So when we sell the bond, the revenue from that bond sale is in an account at Kirkwood, ready to be dispersed back to the company on day one. So it's as if you're getting 10 years worth of tax credits in a lump sum up front. Simultaneously, what happens is as the company is drawing down those funds for any expenses they have related to training, each quarter, they're going to be taking a tax credit for the new positions that they've created. So instead of sending all of the withholding to the state like they normally would, now they're going to take a tax credit for a portion of that withholding, and they're going to divert that from the state to the college, which then offsets the bond sale. So at the end of the day, what that really means is for the company, either they're going to be sending all of their withholding to the state if they weren't a part of the program, or if they're a part of the program, they're going to be sending some of their withholding to the state and some of it to the college. So that's going to be a net zero across the board for the company. Where it benefits the company is they're getting that tax credit on the back end for training reimbursement. So I sprinkled a couple of these throughout the presentation. Some myths I often hear when it comes to the program. Myth one, we probably don't qualify. By and large, most companies actually do qualify for the program. Of course, there are some parameters around who does not qualify. So a retail store, for example, a restaurant, a healthcare facility, unfortunately, those are explicitly excluded in the Iowa code. However, if a company has some sort of interstate commerce, most times they will qualify for the program. Some other kind of maybe obvious things or maybe not obvious things. You must be located in Iowa because, of course, it's an Iowa withholding tax credit that the company receives. Some of the more popular areas would be things like manufacturing, processing, assembly, warehousing, wholesaling, research and development, those sort of things. But this program goes back to 1983. As you can imagine, back in 1983, our economy looked a lot different than it does now. So even things like e-commerce, which in my head, I first think of e-commerce as retail, but because e-commerce does span outside of the borders of Iowa, that allows for e-commerce companies to qualify for the program. So I say all that because I think a lot of times folks think, it sounds like a great program, but we probably don't qualify. I think at the end of the day, if you think your company might qualify, please reach out to me and we can have a one-on-one conversation about what your company does and whether or not it qualifies for the program. Again, by and large, most companies do qualify. One other thing with the qualifications for the program, so a company can't have a substantial downturn in one part of the state and then pop up in another part of the state and say, hey, look, we've created all these jobs. Really what they've done is they've kind of shifted their jobs from one part of the state to another. So they're not going to get credit for that. So that would be another case where a company wouldn't qualify. Also with who qualifies, oftentimes I'll get a question of, what type of jobs qualify? Any job qualifies, whether it's an entry-level position or whether it's a C-suite type position. So no matter what the starting wage is, no matter what the job category is, all jobs qualify. I put together a quick example of what a typical agreement would look like. So in this example, company X hires 37 employees, all qualify for that 3% tax credit. That company is going to have a total issuance of $270,000. Unfortunately, not all $270,000 goes into the trading fund. There are some upfront costs that get taken out of that total issuance. For instance, the state has an administration fee that they take for themselves. They mandate that the college gets an administration fee. With the issuance of bonds, there's some cost involved with that. But in this example, so this company, at the end of the day, for hiring 37 employees, they're going to have a trading fund of just over $202,000. So it's a really great benefit to companies, because if they weren't a part of that program, they'd be sending all of their withholding to the state, and they would be paying for all their own training out of their own pocket. In this case, instead of paying for that training out of their own pocket, they're going to save themselves $202,000. So it's a great, like I said, it's a great benefit to the companies in Iowa. Sometimes when I explain this to folks, they often will say, okay, so are those other fees, is that something that the company's paying for out of their own pocket? No, again, all of the costs associated with the program are offset with the tax credit. Myth number 2, we do very specific training, which is probably not going to be covered by 260E. Again, another very common myth that I'll hear from folks. One of the great things about the 260E program is that the state doesn't have a lot of parameters around what you have to spend your training dollars on. I think the state recognizes that you as the employer know best how to spend those training dollars. So they don't really have a lot of parameters around what you can and can't spend that money on. Whatever your training fund is, it gets split up into 2 buckets. The first half, or 50% of your training fund, is designated for on-the-job training wage reimbursement. So the state sees that as, if you're hiring some new folks on and they come in on day 1, unfortunately, they're probably not going to be able to hit the ground running on day 1. So that's a sunk cost to the company, which the state realizes. So that first 50% of your training fund, whatever that dollar amount is, that is designated for on-the-job training wage reimbursement. The second 50% of your training fund would be for any ongoing training that you do after that time period of your on-the-job training time period. So that could be things like hiring an outside vendor. If you have an internal subject matter expert, that person would qualify. Any travel expenses related to training, materials, supplies. If you purchase a piece of equipment that's solely dedicated to training, that would be an eligible expense. For example, I have one company I was working with who needed to buy forklifts. Forklifts are obviously not cheap. They were able to utilize their 260E funds to purchase the company a forklift just for training purposes. If your company has a college tuition reimbursement program, that would be an eligible expense. If your company has a training room and it's solely designated for training purposes, you could outfit the training room with a monitor or laptops or a projector or any of those things that would go along with a training room. You can spend those dollars, the $260 on a training room. And then another one that folks often utilize will be pre-employment training. So what that would be is, say you brought in a group of employees that you were considering hiring, and you wanted to spend the money to train them before you hire them, and then pick kind of the ones you wanted to hire after the training. The costs associated with the pre-employment training would also be covered. So this kind of gives a snapshot over the last 10 years that, again, the program is very impactful. So in Kirkwood's region alone, we've issued just over $66 million in the last 10 years. And that goes to companies in our area, big companies, small companies, mid-sized companies. So we're very proud of that. We think that we've made a great impact on our region, but we certainly know that there's a lot of companies, hopefully some on this webinar today that have not utilized the program in the past and could be participating in the program in the future and utilizing, that $66 million. It's not a small number at all. That $66 million has helped over 199 companies and assisted in the creation of 7,508 new jobs. Myth number 3, I participate in other state programs, but there's a lot of red tape. I couldn't justify the ROI. The same is probably true for 260E. Really, when I talk with my colleagues at different economic development groups, they'll often say the 260E program is probably the easiest one to manage for companies. There's not a lot of work that has to be done on the front end. And then once a company is fully invested in the program, there's not a lot of work for them to do on the back end either. Now there is some extra work. I'm not going to say it's not going to add any extra work to your plate. However, I think the return on investment, the number of dollars that you'll receive will far out exceed the work you'll do on the back end. So there's really 2 steps in the process of applying for the program. The first is submitting a preliminary agreement. The purpose of the preliminary agreement is it sets the company's base level of employment. So we know, okay, here's where the company is currently starting with jobs. Let's say your current headcount is 20. Your base would be 20. Any net new jobs added over that would then be eligible for the tax credit. So again, you submit the preliminary agreement. It's non-binding. If the company never decides to act on it or decides the program's not for them for some reason, we just simply cancel it. But what it's good for is that if the company does grow in that 2-year time period, it puts you in a place to move to step number 2, which would be to submit a final agreement. So the final agreement is where the company would actually participate in the bond sale and say, okay, since we've submitted the preliminary agreement, we've been fortunate enough to grow by 10 employees, and we want to participate in the bond sale. So at that point, you would submit to me a list of the jobs and the salaries again. And then at that point, I would say, okay, here's how much of a tax credit you'll generate. And then that would be what your training fund is. Your portion of the bond would be relative to the number of new jobs and the salaries associated with them. One more thing, I'll jump back to the preliminary agreement. One more thing that it also does that's very important is it not only sets the date of hiring, but it also sets the date of training. So if a company submits a preliminary agreement today, hires a bunch of people tomorrow, starts training them next week and starts incurring those expenses, assuming they move to step number 2, they can go back and say, okay, since the time we submitted the preliminary agreement, we've incurred, $100,000 worth of training expenses. They can then submit those and get reimbursed once the bond is sold. Myth number 4, since the community college manages the program on behalf of the state, our training probably has to go through the college. While Kirkwood has a fantastic corporate training arm of the college, they do a fantastic job over there. The state doesn't say you have to spend the money with the college. If for some reason the college can't meet your training need, or maybe you have a vendor that you've been working with for 20 years that you feel comfortable with, you can use those dollars however you want. But with that, I do want to give a shout out to our Kirkwood corporate training division. They're great partners with me. Oftentimes I'll work with companies and they'll have all these new training dollars and they'll say, this is really great, we're excited. However, it's almost overwhelming. We don't know how to spend them. So I'll work with our Kirkwood corporate training wing to sit down and do a needs assessment and say, okay, now that we have these training dollars, let's talk about where your needs are at. How can Kirkwood help? Those sort of things. So it could be for training purposes. It also could be, to get you connected with our students. They do a great job of that. So if you want to get your company in front of some of our existing students on the credit side, we can do that. If you want to do that pre-employment training, they do that as well. If you have any sort of custom certificate program needs that you have. For example, a few years ago, we had our one of our sector boards come to us and say, we really need CNC workers. We need them now. We would love to have your 2-year students, but we really just need kind of some people that can get their foot in the door with some basic skills. So based off of the feedback there, they were able to kind of pull some of the parts of the 2-year program into a short-term certificate, and it provided the student with some basic understanding of the program to get their foot in the door and to start working with the company. And then one other thing that's coming up here, we do have our FIT training series. The FIT training series is a great program. It's very flexible to the company. If you want to purchase a seat to FIT, what it does is there's different subjects at a time that are going every few weeks, and a company can buy one seat or more if you'd like. And it's kind of like having a season ticket to an Iowa football season, where you could send your marketing person to the marketing session. You could send your salesperson to the sales session. The same person doesn't have to go to every single session. This is my contact information. As I mentioned, there's probably more involved with this program than what I included in this presentation. But again, we only had a half an hour, so I tried to keep it short and simple and give you the high level overview. But if you do have additional questions, if you want to chat further, please let me know, and I'd be happy to come out and meet with you. So with that, I'm going to turn it back over to Corey. Corey, any questions that we had throughout the presentation?
No, I don't see anything in the chat so far. So with that, first of all, Tyler, I just want to take the time to thank you for presenting for us today. It was very helpful. I love the myths and everything. So basically, if you don't know, just ask, right? You don't know unless you ask. So I appreciate that.
I'm going to change one thing in my presentation. I noticed I don't have my email address correct. It's actually tyler.mccarville@kirkwood.edu. So that would make a difference. So please, if you took that down earlier, please note that.
Perfect. The question in the chat was, will the PowerPoint be sent out? And yes, I will make sure that the recording is sent out with this. So you'll have the PowerPoint in hand that way. And then there's also another question for you, Tyler. Can you clarify the part where you discussed companies being reimbursed for the expenses of a trainer?
Yeah, sure. So let's imagine a situation where you ask Kirkwood to come in and do an OSHA training, and Kirkwood says, yes, of course, we'll come in and do a training for you. And we set up a training, and the training's $3,000. So what would happen is, for finance, for accounting reasons, the company would pay for that training up front out of their own pocket, and then they would submit an invoice through the 260E program, and then we would reimburse the company the $3,000 out of your training fund back to the company. Perfect. We have an online portal that all that goes through. I think it's pretty simple. It's it's one of those things. It's like anything else. It takes a couple tries to get used to, but once you figure it out, it's a very simple system. Our goal is to always have payment out to companies within 2 weeks, 3 weeks at the most. So whenever you submit that invoice to the college for reimbursement, our goal is to have you reimbursed within 2 to 3 weeks.
All right, some more questions coming in for you, Tyler. So the next one is there a way to see examples of approved training expenses Eastern Iowa companies are using?
Yeah, a list of like what kinds of expenses? Is that what the question is?
Yep. So it says, is there a way to see examples of approved training expenses?
Yeah, I mean, I get that question a lot. And again, I've been doing this for 9 years now, and I've never really come up with a good answer for that, because the program is so flexible on how you can spend those training dollars. So to try to come up with a comprehensive list of everything that could be reimbursed is really hard. That slide that I showed you earlier, these are some of the kind of the big ones that most fall under. But if there's something that you have in mind and you're thinking, would we get reimbursed for this? please just send me an email and let me know. And it probably would be a quick turnaround answer. The answer probably would be yes.
Great. All right. So next question. Is the 3% you divert from state withholdings for all employees or just those that are designated under this program?
Great question. Yeah. And I should have clarified that. Yes, it's just for the new folks. So again, if you start your preliminary agreement at 20 and then you hire 10 people, it would be for those 10 people. And one other thing I'll clarify, it's up to a 3% withholding tax credit. And I say up to because all jobs across the board, no matter what the salary is, all jobs qualify for what's called a new jobs credit, which is 1.5%. They qualify for an additional 1.5% if they meet the labor shed wage, which is different in every single community. For example, Cedar Rapids is $24.20 an hour. If they meet that wage or above, they qualify for that additional 1.5%, which gets them to 3%.
All right. Next question. So the training doesn't just have to be for the new position hired.
It should be in theory. And this is where we kind of there's a lot of nuances and gray areas to the program. So by and large, yes, the training dollars are for the new folks. However, there is what we call a 50% rule where non-260 employees could utilize the 260E funds. What the 50% rule means is if you have a vendor come in to do a training and they say, we're going to charge you $5,000. I'm just using 5,000 as an example, $5,000 to do the training, whether you send one person or whether you send everybody in the company, it's going to be $5,000. It's a flat fee of 5,000. If 50% or more of the trainees are 260E people, the entire cost of the training would be reimbursed out of 260E, out of your 260E fund. If it's less than that 50% threshold, we would reimburse at a prorated rate.
Great. All right. We have time for one more question. Do banks and insurance companies qualify?
Insurance companies, yes. Banks, it depends on what type of job. We've worked with banks in the past where the front end staff, like tellers, unfortunately don't qualify because the state sees them more as retail, believe it or not. But if they're a big enough branch where they have enough back end workers, whether it be like marketing or those type of back end positions, those are the ones that would qualify.
Great. All right. That is all the time we have. And I believe that answers all the questions in the chat.
Perfect.
So great. Thanks so much again, Tyler, for presenting for us today.
Thanks, everyone.
Everybody in attendance, if you wouldn't mind just staying on for a brief second to fill out a 3-question survey, we appreciate it. And thank you so much for taking the time to join us today.